Welcome to the deep dive.
Great to be here.
Today, we've got quite a collection of sources. We're going to be looking closely at money, the stock market.
Yeah, everything from like big market crashes down to the real basics of what money even is.
Exactly. So these sources, they cover a lot, right? Specific financial stuff, but also some, basic ideas about handling your own money.
That's the plan. Our mission really is to pull out the key insights from all this material, try to make sense of the jargon,
Uh-huh.
and see how it all connects, for understanding the news or just, well, thinking about personal finance.
Think of it as us trying to get you the core ideas from these sources, but hopefully in a clear and maybe even engaging way.
Let's hope so.
Okay, so let's jump right in. One source kicks things off with a pretty dramatic situation. A stock market taking a huge plunge.
Yeah, really set the scene. Imagine your portfolio, that's your investments, right?
Right.
It lost half its value in just 1 week.
Wow. Half in a week.
Yeah.
That's fast.
It's incredibly fast.
Yeah.
And the sources give some scale, too, mentioning the NASDAQ Q indicator.
Yeah.
It was down 200 points.
Yeah.
And the Dow Jones indicator also took a big hit.
Okay, so when you hear numbers like that for NASDAQ Q, for Dow Jones...
It means it's serious. It's broad.
Yeah.
It's not just one company having a bad day. It's like a market-wide downturn.
Right. So let's unpack those names then. NASDAQ Q, Dow Jones, we hear them all the time. What exactly are they based on what we've read?
Okay, so NASDAQ Q. The sources basically describe it as a major American stock market. It's mostly electronic.
Yeah.
Where stocks of publicly traded companies get bought and sold. So when it's down 200 points, that's like a measure of the overall value drop for stocks listed there.
Got it. And the Dow Jones, that's a bit different.
Yeah, slightly different angle. It's presented more as an indicator, like a gauge,
Indicator?
showing how a selection of, major U.S. companies are doing. The sources say it's often based on maybe the 50 biggest ones, sometimes grouped by sector. And its movement kind of signals the mood low isn't great, high suggests things are looking up overall.
So these publicly traded companies, their shares are on markets like NASDAQ. And the people managing these trades, the sources mention stockbrokers.
Right. Their job, according to these texts, is to manage these securities and investments, stocks, bonds, that sort of thing.
Okay.
And they're supposed to keep them safe and, ideally, make money for their clients, a profitable return.
And that collection of stocks, bonds, whatever else you own in the market, that's the portfolio.
Exactly. That's your portfolio.
Yeah.
So back to that first scenario. Our portfolio is worth half of what it was worth 1 week ago.
Yeah.
It literally means half the money invested in that whole collection just vanished. Poof.
Oof. Yeah, that's rough. And that kind of situation, that rapid loss, often points to what the sources call a bear market, right?
No, they bring up these classic terms, bull market, bear market.
Right.
Finance speak, obviously not about actual animals.
Yeah.
A bull market, the sources say, is when the market's really charging ahead, growing fast, strong. They give China's market, as an example that's often described that way, strong growth.
Okay, charging ahead. And the bear market.
Totally the opposite, slowing down, not growing well, maybe falling. The sources kind of use the image of a bear hibernating.
Ah, okay. Sluggish.
Yeah, sluggish, pulling back, that huge plunge we talk about, classic bear market stuff.
Makes sense. Now, inside that portfolio, you might have bonds. The sources talk about those too. What's the simple idea of a bond?
Super simple, really. A bond is just a promise. You give someone money, say a company or a government, and they promise to pay you back later, plus interest. You're basically lending the money.
Okay. And there are different kinds. The sources mention high-yield bonds.
Yeah, high yield just means it pays back a lot, a high return.
Right.
The source had that analogy. An orange tree yielding 300 oranges. A high-yield tree gives you lots of oranges. Same idea.
Okay. And then trash bonds. Sounds less good.
Yeah, definitely less appealing. It's a more informal term, the sources mention, for a really risky bond.
Risky how?
Risky, like there's a real chance the seller, the borrower, might not actually be able to pay you back. They could default.
I see. So putting it together, high-yield trash bonds are risky, but they offer a big potential payout because of that risk.
Exactly. High risk, potentially high reward. You might make a lot or you might lose your investment. The sources also mention government bonds, usually seen as safer, but, it depends on the government.
Right. And all this market mess brings up strategies. The sources talk about liquidity. What's that?
Liquidity is basically about having cash available, like actual money you can grab easily.
Ah, okay. Cash on hand.
Yeah, cash on hand. Or money you can get to quickly to pay bills or buy things without having to, say, sell off a stock real fast, maybe at a bad price. The sources say accountants watch this closely in companies. Do they have enough ready cash?
Gotcha. And another term, emerging markets. Sounds
Yeah,
like potential.
that's the idea. Emerging, like coming up,
Oh.
developing. So these are newer markets, maybe not as stable or established as, say, the U.S. or European markets, but they might offer big growth potential. The sources mention places like Southeast Asia or West Africa as examples.
And the strategy might be to look there after things go bad elsewhere.
Potentially, yeah. The sources hint at reinvesting there after maybe cutting your losses in a downturn market.
Which brings us nicely to another phrase they highlight, to cut our losses.
Oh, yeah, that's a big one. It's tough, but important. It means recognizing you're losing money, accepting that some of it is gone for good,
Right.
and deciding to stop losing more. Maybe you sell that falling stock, take the hit, and just move on. Prevent it getting worse. The source mentioned a failing business selling assets, that kind of thing.
Pragmatic, but probably painful. Okay, and the other phrase, think outside the box. We hear that everywhere.
We do. And here, in this financial context, it means, get creative. Don't just do what everyone else does or what you've always done. Look for new solutions, maybe approaches that seem unconventional. Perhaps bend the usual thinking a bit to find a way forward, especially when things are tough.
So the sources cover the mechanics, the strategies, but they also step back a bit, reflect on the stock market itself. They call it a science.
Yeah, they do. They stress it's not, like, totally random. It involves analysis, data, maybe formulas, trying to make calculated decisions about risk versus reward.
So
Yeah.
is it just gambling then? That comparison always comes up?
The sources tackle that head on. They say it's like gambling because there's risk, absolutely. But it's not supposed to be just gambling,
How so?
because the idea is to base decisions on analysis, on probabilities, on understanding the underlying companies or economies, not just pure luck. You're investing in something tangible, supposedly.
Supposedly. And the real world impact when this science goes wrong, or even when it goes right but involves big risks,
Yeah.
it's huge for ordinary people.
Oh, absolutely. Think about retirement funds. The sources talk about stockbrokers managing these funds, aiming for high yields, right? Maybe 25% return instead of, say, 5% from a safe bank account.
Yeah.
But the risk is massive. They're playing with people's life savings.
And the sources actually mention a time this went badly wrong.
They do. They refer
Yeah.
to a period, maybe a couple of years before their main discussion, where a market bubble burst.
Right.
Real estate, stock prices, they just tanked. Led to a recession in the U.S. People lost huge amounts of their savings, their retirement money.
Yeah.
It really hammers home that point that sources make.
Mm-hmm.
You absolutely have to do your homework. Be careful. Understand the risks.
Wow. That's a sobering reminder. And, that leads us perfectly into the other big chunk of our source material today, which steps back even further. It's about money itself.
Yeah, this part is really fundamental. It starts super basic. Money is just the thing we use to buy what we need. Food, clothes, a place to live.
The essentials.
Exactly. It's what you earn from working, typically, and then what you use to get by.
And the sources even give a quick history.
A little bit, yeah.
Yeah.
They mentioned barter, just swapping goods.
Right. I have chickens, you have tools.
Exactly. But it's inefficient, right? You got to find someone who wants chickens and has the tools you need. Tricky.
So money developed.
Out of necessity. The sources mention early forms: salt, gold, silver, even cowrie shells in some places.
That's all shells.
Yeah. The key was finding something valuable, accepted by most people, easy enough to carry, divisible,
Makes sense.
which eventually led to coins, then paper money, and now, bank cards, online payments. The form changes, the function stays.
And how do people get money today? Mostly jobs.
Primarily jobs, yeah. Working in offices, shops, factories, schools, hospitals. Or sometimes as gifts. But the sources make a point. It doesn't grow on trees.
No. It usually takes effort.
Which leads right into the advice bit. Using money wisely.
Okay.
The sources really emphasize this. Doesn't matter if you have a lot or a little, managing it well is key.
And what does wisely mean, according to them?
Well, they suggest a few things. Save some for the future, emergencies, whatever. Put in a bank, or maybe keep some safe at home.
Okay, save. What else?
Spend wisely. Prioritize. Needs before wants. Food, rent, clothes first, then maybe other things.
Avoid wasting it.
Definitely. Don't just buy stuff you don't really need. And if you're able, maybe help others who have less.
That's a nice touch. So it's about being careful, planning, not just spending impulsively.
Right. And they reflect on why money is important. It lets us buy necessities, get an education, pay for health care, live with some comfort. It's
Well,
pretty vital in our world.
but then they make an even bigger point.
Yeah, this part is crucial. They say money isn't everything. Some things are more important,
Like what?
like good health. Money doesn't help much if you're too sick to enjoy life,
Very
right?
true.
And family and friends. Real love, real friendship.
Yeah.
You can't buy that stuff.
Definitely not.
And happiness. Sure, money can buy things, distractions, temporary pleasure maybe, but true, deep happiness. The sources suggest money can't really buy that either.
It's really interesting how we went from like NASDAQ Q points and high yield trash bonds
Yeah.
all the way back to these very fundamental ideas about saving, spending, and what actually matters more than money in life.
It really puts all those financial tools and strategies into perspective, doesn't it? They're means to an end, hopefully an end, that aligns with those deeper values.
So, quite the journey in this deep dive today. We went from that plunging market, defined NASDAQ, Dow Jones, bull and bear markets, different bonds,
Talk about strategies like cutting losses, thinking outside the box.
and then grounded it all in the basics of money, its history, how to use it wisely, and its ultimate place in our lives.
Yeah, understanding these things, from the big market stuff down to your own budget, it really helps navigate the world, doesn't it? Whether you're investing or just, living.
Absolutely. And these sources, they kind of leave us and leave you, the listener, with a very direct question to think about.
Right. It boils down to this. How do you use your money? Do you save it carefully? Or does it just sort of disappear quickly? Thinking about that, making conscious choices. The sources suggest that's a really important skill for everyone to develop.